Good morning, everybody. Good morning. Good morning. Good morning. Happy Friday. I agree. Good morning. Hope everybody has survived this week, whether our content helped or not. Hope everybody survived this week. Awesome. Great to hear, Jeff. Great to hear. Hope everybody was on the right side of the market. Hopefully we tried to keep you on the right side of the market, at least hinting to that on which side of the market you should be on. Good morning, Will. I think this picture right here should be very clear which side of the market you should have been on yesterday. And hopefully I made that crystal clear in the pre-market prep. So awesome. Good. Thanks, Voltarian. Good. Good. Awesome. That's what we like to hear. So, okay, let's go ahead and jump right into it. Thanks everybody for joining us. Again, like and subscribe on X and YouTube there. This is Michael coming to you from Game Edge on Friday, February 6th with our pre-market prep session. It's been a long week for the overall market, so make sure you check out those pre-market prep posts as well as our videos for the week. Review those over the weekend. Key announcement with the Super Bowl on Friday, we're moving our open mic to Saturday morning at 10 a.m. So if you're available, be happy to join us. We'll be posting that. We'll be live on X as well as YouTube. So the open mic basically is you can ask any questions you want. It's specifically tailored to our members. They post questions and we answer those live, and it's recorded so they can go back and review those. But if you want to join us on Saturday morning, 10 a.m., we'll be here for the open mic session. I'd love to have everybody come here. Request that subtitles be turned on. Okay, I'll look into that, Andrew. Yeah, I'll look into that. I believe StreamYard has that ability, so I'll check that out. No problem. Okay, so let's go ahead and jump right into it. As always, we cover our three pillars there: sentiment, structure, and trend. Our market trend model based on the tick index, bolded white line, intraday instantaneous cumulative tick. We've really been speaking about this whole week, how it continued to weaken. This is basically just keeping you on the right side of the market. Again, the railroad tracks are what we refer to as the railroad tracks, or the moving averages. These are your 1 to 3 day time frame trading. Bolded white line is, again, your 0DT time frame. And then the colored ribbon is our longer look back period. And this is how we position longer term money in the overall market. Again, our mechanical portfolios have been turned off because the bolded CT or white has been below the overall colored ribbon. So we're not entering long capital in our mechanical portfolios, as well as putting capital to work from a longer term time frame. And the concern now is that we're below the colored ribbon, and the longer we live below the colored ribbon, the more pullback we'll get in the overall market. And now we're actually having a negative slope in the red and the cyan, since the bolded white line is under those levels. So how we bounce and when we bounce will be really important to the upside. And then if we get rejected at the bottom of the colored ribbon, start moving back to the downside. So as of now, these are sell the rallies until we get back above at least the moving averages and then the colored ribbon. So each rally we will continue to look to be selling into the overhead until this market trend model changes, as well as our sentiment and structure changes. All right, moving on to the trading view chart. Again, market trend model in the trading view, continuing to the downside. You'll see the negative slopes in the what we call the momentum railroad tracks moving averages or railroad tracks. And again, continuing to the downside here. So until we recover these, start moving to the upside, and these start stacking in the proper order. The white would cross, the blue would cross the orange, and then we'd have those stacked in a positive slope, as well as the instantaneous market trend model moving to the upside. We'll continue to look to sell the bounces and sell the rallies into overhead key levels, again, until that changes. All right, let's move on. The SPX options complex, largest, most notional value. Again, this is your tanker or cruise ships because of institutional positioning. February expiry is denoted by our web app. Put dominated, again, negative GEX continues to increase there. Net GEX, it was fairly balanced, but we're starting to increase that negative side now. Well below the transition areas we discussed at 69.25. 6,900 overhead will be that first kind of bogey or hurdle to get above if we see any sort of bounce. And then you see these key quarter areas here, 68.25, 68.50, and then obviously 6,900, and then 6,800 to the downside. We get below 6,800, we start entering a much more negative put dominated structure and environment. So we look for a rapid move down towards 67.50, most likely on the SPXA there into the February, obviously OPEX. All right, SPXP, these are our cruise ships, our speedboats. These are your 0 DTE, as well as weekly and daily expiries. You can see via here. We were talking about the large expiries for the next three, 2/6, and then Monday 2/9, actually 2/10 is a lower expiry, and then we move to 2/11. So really, we're just focusing on these next two Friday and Monday, obviously today, into our positioning. We'll put dominated here, extensive negative net GEX, entrenched, obviously upper quartile though, so we have multiple expiries turned on. You see 6,800 is a key level. Below that, again, we enter a little bit more negative structure all the way down towards 67.75, and then we actually have some of those out of the money puts that would be supportive on a charm level, not again significantly supportive, and we could overcome those very rapidly and continue to move to the downside, but depending on what the intraday positioning is. And then to the upside, you see 68.50. That's going to be key level. We talked about 68.37 in our pre-market post. That's the bottom of the drunken sailor range, where we actually flip to a slightly more positive gamma structure. So we'll continue to watch that. But 68.50 overhead would most likely be stalling and a failure rejection area. And then if we do move above 68.50, we'd be watching the bottom of transition here up towards 68.90. Again, you'll also notice the misaligned GEX and DEX transitions in the upper quartile, as well as the 0 DT. Again, these are all cautionary. That means positioning within this overall structure is just misaligned and uncertain. Again, so we like certainty in the structure. You'll notice when we're trading the best, or we have the best probabilities or highest risk reward trades, our GEX and DEX transition are actually confluence and overlap, and they're really only about 5 strike wide. So that gives us very easy if-thens of above or below those transition areas. And you're most likely in a call-dominated environment that would be supportive on any pullbacks. As of now, we're not supportive. These are sell the rally overall structure and looks with our market trend model, as we continued to see throughout the week and as we continue to preach really on our pre-market preps. All right, moving on the SPXP GEX ratio. I talked about this yesterday, that we're reaching an extreme on the GEX ratio, that we're moving into a possible area where we could bounce. We actually bounced intraday and then started moving back to the downside. And everyone knows already now, if you're watching the overnight futures, we had a large move to the downside that we've recovered. Again, I'm not saying this is financial advice, but we are reaching historically an area where the rubber band continues to be stretched to the downside, and most likely there will be some snapback, as this is a short-dated call gamma versus short-dated put gamma overall ratio. And again, we're reaching that 0.5 level, which is an extreme on the put gamma ratio compared to the call ratio. So most likely we'll get to a point where we'll see some monetization, put monetization. We'll see a snap back to the upside, but that needs again to be met with a resultant call speculation to the upside, out of the money call speculation, to change this ratio to get back above 1. And that would lead to call speculators being in control and bulls in control. As long as we're above 1 or below 1, we're still in the sell the rallies and a put dominated negative structure that will be difficult for price appreciation. All right, moving on, the SPXP delta balance. Again, I talked about this yesterday. Future expiries out in time. The delta balance, or the aggregate, is the blue line. This is left-hand plane and right-hand plane above and below spot price. We're pegged at -1 for future expiries into next week. I said look for weakness into Friday and Monday, which we're still getting. But we do see a positive slope here in the left-hand plane. So that is that speculation below us that I was talking about. So we may be reaching a point where that the left-hand plane, those out-of-the-money puts, may be actually taking some profit and exposing some in-the-money calls that could become supportive. We need to see the resultant bounce or positive trajectory in the right-hand plane, which is the green dotted line. Again, that would indicate those in-the-money puts overhead are most likely expiring or monetizing, and we're actually seeing some out-of-the-money calls being exposed. But as of now, we're not really seeing that. Delta bounce is trying to be pulled up there, excuse me, in a positive slope due to the left-hand plane. So we'll continue to watch this day over day. But into Monday is also maintaining its weakness with the delta bounce at -1. This could change, though, with a resultant change today with a positive overall improvement in the structure. This could start to pull up towards the 0 line into Monday. All right, moving on the SPXP net stack command. Again, this chart here, I encourage everybody to really study it. Come into our Discord or check out all of our education. Basically, this is just giving you the highest probabilities once you cross these certain levels of transitions and changes that market makers and dealers have to hedge as we cross these essential levels here. And you'll notice the net delta, we actually have in-the-money calls below us, obviously significantly below where we're at now, but we have in-the-money puts above us. So this is where the price appreciation will be difficult, this overhead in-the-money puts, and you notice the charm. Again, 68.50, these are out-of-the-money calls. So as the day continues to tick on, these continue to decay. This continues to grow, and that will be a headwind to move to the upside. You see where we transition, though, from out-of-the-money calls to in-the-money puts. We drop below 68.20. These out-of-the-money calls become in-the-money puts. Again, significantly more difficult as this would change to all put dominated. Again, much more negative structure, and put dominated, again, would lead to possibility of a quicker move to the downside. And you see these gamma levels. Obviously, this is just the highest sensitivity areas where most likely you see, if you have a large gamma area, you could see some overall stalling within that overhead area. In the money puts, again, 68.35. We talked about that 68.37, 38 overhead. 68.35 is the bottom of drunken sailor range, so make sure you put that on your chart. This will be a key area to recover. You see where we change from in the money puts to out the money calls at 68.37. So that puts you in a little bit more positive gamma, favorable environment for price appreciation. So key level there on the gamma side. And then the Vanna, obviously fairly balanced. We do give a slight edge to the right-hand plane. So if we do see a drop in volatility with out the money calls come in, we could see that Vanna help push us up. But again, it's not a significant offset from the left-hand plane. So again, fairly balanced. So it's not going to be a large Vanna tailwind that continues to drive us up. It's going to have to be mechanical speculation as well as getting above these key net charm levels, overcoming those essential charm levels and offsetting those. So we'll continue to watch this, but put these levels, these transition levels definitely on your charts and understanding what happens when we cross those levels with concerns to market maker dealer hedging, as well as the overall structure change that's occurring on the upside and the downside. All right, moving on the SPXP 0DT. So we already talked about 68.30.35. Again, that's 68.37. This is where we get to a little bit more favorable game environment. But again, you'll still notice all the in-the-money puts overhead and significant charm at 68.50. Again, that's going to be a large headwind as long as we're under that, as long as we continue to decay. At 4 o'clock, all the options meet their maker. And again, this will continue to grow if we're under that 68.50 and will continue to be a headwind. Now, we can't overcome that charm via mechanical speculation, intraday call versus put speculation by market participants. They would have to be opening a significant amount of out-of-the-money calls, closing significant out-of-the-money puts, or even in-the-money puts if they start reaching a fear level where they may be losing some intrinsic value as we continue to march up this overall chain and overall structure. Again, within the overall drunken sailor range, it will be extremely choppy. Large drunken sailor range today. You see very low net exposure within the transition areas. So if we get into these overall areas, this could rapidly be moved back and forth with intraday vol metrics, or what we call intraday vol speculation. So we'll continue to watch that. Again, misaligned transition areas, that's caution, uncertainty. The negative trans area is confluence and overlap. So we're a little bit more positive or confident about that 68.60 area. But then you see, as we move above the transition areas, positive transition areas, they're offset and misaligned. So this is not really a good if-then scenario for an overall trading plan. So again, put dominated, significant negative net GEX today. Key area 68.35, 68.37 to overcome, and then we have 68.50 overhead, which is close to the bottom of the negative transition area that we'll be watching. All right, let's thanks everybody for joining us again. GameEdge.us newsletter. Put your email in. You'll be delivered the Beyond the Bell over the weekend. Again, reminder, 10 a.m. open mic tomorrow. If you're interested, you can jump on. Free courses, GameEdge Fast Pass, again, flagship options course. Check that out. We'll look at some individual equities real quick, and then I'll go over to our trading view chart. Again, key level on SPY and Qs this morning. Already posted this in trans at 603. To get above that, that puts you in a little more favorable call dominant, not necessarily call dominated, but a little more favorable positive gamma, positive delta structure and environment with the opportunity to move to the upside. And then you see zero GEX up at 617, and obviously transition P-trans all the way up at 624. And then zero GEX 686, and then P-trans 691. But moving above this in-trans level is really going to be key for the bulls if they want to have any opportunity for price appreciation. So 603, 682 on the Qs and SPY, and IWM is already moving above that area. You actually see COI at 260. So again, that's that highest sensitivity area for IWM for today that I would anticipate some stalling. So we'll see that. You too, Butch Dad. Thanks for joining us. All right, so individual equities, anybody wants to cover those, you can throw those tickers in the chat and we'll cover those really quickly. If not, I'd be happy to finish this up and just tell everybody to manage risk for the day. BWXT, I'm going to say that doesn't have enough OI for us. Oh, it does, surprisingly. Okay, I guess I'm not familiar with BWXT. So these are monthly expiries on BWXT. Yep. See you tomorrow. So let's just go with the 116. Oh, hold on. Wait, this is not updated. So the Greeks have not been updated on BWXT. So I'm going to say this fell below our OI, and that's why we're not updated. So I can't really give you an idea of the overall structure in BWXT. And you see that OI over here is only 6,000. It probably barely reached our 100,000 filter, but the dealer dynamics and hedging and structure is not with it. So cool. Yeah, we like to trade larger OI stocks. So we got an idea of what the overall structure looks like, what the dealer metrics look like, what dealer hedging looks like, and that gives us the higher probability risk reward trades. Yes, correct. Yep, lack of liquidity. Amen. I'm actually not familiar with BWXT either, that ticker. So I know thousands and thousands of tickers, but I do not know that one. So, all right. Okay, thanks everybody for joining us this morning. Manage risk as always. Everybody make it a great Friday and have a great weekend, and we'll see you on Saturday. Tesla, yeah, we can check that out. Amazon, Horn Dog, look at you. Okay, Tesla, upper quartile, call dominated. As I said yesterday, Tesla still looked fine on a pullback and structure still looked good. Now, that's not going to include what's going to happen day to day for Tesla, but on a bigger picture, 40,000 foot view, Tesla still looked fine. 400 is going to be a key level here to hold. You're within the overall transition, so you'd like to move above transition. I'm going to go out to the monthly expiry. Let's just look at the monthly expiry, okay? How about that? So monthly expiry, we are put dominated, so I would anticipate some weakness on Tesla into the monthly expiry and then see what happens after that. You're below transition. The key takeaway here is on the upper quartile. Again, if we remove some of these expiries, you can click through and you can see when the structure changes, but we're call dominated, very much entrenched below us. I know that's significantly below. We're in the 350s, 320s, but very much entrenched call dominated below us. So again, on a 40,000 foot view for Tesla, I would not be, worried about anything. Shorter time frame, you most likely will see some weakness, okay? And it's going to be difficult for price appreciation. But you still have 450 up there for PGEX. So speculators are still alive and well. I would anticipate this is some short term. We could click through and see what it is, but I anticipate this is short term positioning for Tesla from speculators. Yeah, so even on to the 9th, which is Monday, we go back to call dominated. I know it's not a significant OI and it's not in the upper quartile, but you can see the structure, how it changes there day over day. And then 211 is actually call dominated. Everything looks good there. 213, structure actually improves there. 450, you see there's actually balance almost of calls and puts there overhead, even though you're below transition. So structure is fine on Tesla. Not screaming anything terrible. All right, so Amazon's put dominated. I did look at Amazon the other day. The overhead was going to be difficult. Downside, you're well below transition here. Not a significant amount of in the money calls below us. And Amazon was looking fairly weak. I know they had earnings and we're selling off. And then into the monthly expiry, it looks fairly weak on Amazon too. So upside is going to be difficult on Amazon is my takeaway. And we're below transition. So weakness on Amazon. Now, I was looking down towards this 200 level. I thought that was interesting. I don't know technical analysis on Amazon. I haven't looked at it, where the 200 day is at or anything like that. But that 200 level did look interesting to me, down towards maybe 185, 80, 85 on a pullback. And then looking through that to see where you could see a bounce. But that 200 level right there on the upper quartile, I think was a key area. So that's what I'd be looking at on Amazon Hard Dog. So, all right. Thanks everybody for joining us. Make it a great Friday. Make it a great weekend. And we'll see you on Saturday morning at 10 a.m. for our open mic session.